Hi, my name is Scott Gibson with Beneath the Surface. I'm here with Brien Lundin, the owner and editor of Gold Newsletter. Thanks for being with us, Brien.
Thank you, Scott. Glad to be here.
Wanted to talk to you a little bit about gold. You're an expert there and have been commenting on it for years. What's your take of where the gold market is right now and what we can see coming forward?
Well, one of the things I've been seeing are the remarkable parallels between today and 2008. Roughly speaking, 2008 was America's credit crisis. Now we're seeing Europe go through its credit crisis. It's more of a slow-moving train wreck as opposed to the sharp correction in 2008 for the U.S. But you're seeing a lot of comparables. You're seeing gold react as we look at some perhaps quantitative easing in the U.S. We're also seeing 10-year Treasury yields get down now actually to lower levels than we saw in 2008. There's a real flight to quality. There's a real flight to safe havens. And we're seeing the kind of volatility that we saw in 2008. The key here is that to get out of such a crisis, we will see some form of monetary inflation or quantitative easing come out of Europe. And if that situation remains analogous to what we went through in 2008, then gold's reaction from that bottom to its subsequent high will be something that could be quite remarkable.
And what was the percentage gain?
Well, after the lows in 2008, gold went up 167% over the next 3 years to its high over $1,900. If we have a similar reaction this time around from gold's lows, it would imply a gold price of around $3,800. Now, I don't think we're going to see that on the high side, nor do I think we're going to see the correction in gold on the low side. On the low side, we would have to get up to around, or down to around $1,428 is to create that kind of a comparable bottom to what we had in 2008. I don't think we're going to do that. I think we're actually seeing gold bottom, see that gold has bottomed around here. And it's now reacting to the prescription for the monetary ills, the fiscal ills in the Western world. And that prescription is going to be more monetary easing, more quantitative easing.
Well, and talk a little bit about quantitative easing 3, the potential there, and your thoughts on the likelihood that it might happen.
I think it's almost a certainty in Europe. They're going into recession or deeper into recession now, and we'll have to have some type of a monetary inflation to get out of that, to cure their debt woes. In the U.S., we're seeing the economy slow down. The latest job numbers were just absolutely awful, and that was on the back of highly disappointing job numbers the month before. So we're seeing a trend there that is not only bad, but it's getting worse. And I think you're going to see first some rhetoric coming from the Federal Reserve hinting of the possibility of quantitative easing. And at some point over the summer, I think you're actually going to see it put into effect.
And what do you expect the result to be on the gold price?
Very bullish for gold, very bullish for gold. Each of the prior two quantitative easings added about $200 or so to the gold price. I mean, $300 or so to the gold price. We could see something similar happen if we have another round here. So, you know, I think around midsummer to late summer, we could have a reaction, a very serious reaction, not only in the metals, but in the junior resource stocks. And that's typically where you see, from a seasonal standpoint, historically, you see the juniors bottom in late July, mid to late July to early August. And I think we're going to get back to that kind of a pattern this year.
And what's your expectation going forward for the stocks next year after the summer and into the fall?
I think we'll have a good fall. I really do. In particular, I think that a lot of or a number of the exploration plays in the Yukon are going to make some noise this year. Last year was kind of a wasted year. They fell behind with the labs. They couldn't get the assays in. They couldn't get to drilling for a lot of these plays. There are some companies that have some outstanding projects, some that have some very good anomalies, soil anomalies they identified in the last field season that they're ready to drill right now. I like Ethos Capital in particular. I like Golden Predator, which is kind of a rediscovery play with its Brewery Creek project. That's a project that will end up going back into production at some point, so they actually have a discovery in hand. I'm looking at a new play, Precipitate Gold, that is just started trading very recently. I haven't recommended it yet, but it's got a good suite of projects. It's got an outstanding management team and a really good share structure. So I'm starting to take a hard look at that as well.
I own all three of those stocks. Do you, for full disclosure reasons, do you own those ones as well?
I own Precipitate, and I own a little bit of Golden Predator. I do not own Ethos.
Excellent. Thank you very much for being with us, Brien.
You're welcome.
Again, that's Brien Lundin of Gold Newsletter. My name is Scott Gibson with Beneath the Surface. Thanks for being with us.